Welcome to TradeTheMBI.com. This is John. This report is for the 26th of September. And you can see we keep supporting right across that EBM yellow line that, well, we can look at the current values of them by just sliding it across there. 2916.50. And, you know, we've had pretty weak shakeout readings in that, given the fact that we're making higher highs. But we've had decent support here in the DOC. The problem is now, again, you've got short-term buyers kind of fading, but you don't really have shorts active. There's just not a whole lot of significant interest, and that's a positive, except for when it starts to change just slightly. And I think there's a little apprehension here as we wait for the finalization of confirmation hearings, and that as the political season starts to heat up and there's a clear idea of how things are going to shape up, because that definitely will impact how things go forward, whether there'll be continuity or if there'll be gridlock. Those are always interesting items for the market, and they have different implications for different parties. The real question was, inflation, oil, and, if there's any hiccups in the economy as it's been moving. So you can see the NASDAQ picking back up pace. So this is improved quite a bit relative to the S&P. The movement has been much more significant. Just as weak readings, though. It's kind of a mess. And that's okay. It'll iron itself out. The euro remaining at its highs certainly helps the market big time. Gives it a huge boost as far as earnings, though. You can see that there's been a significant number of downside adjustments for projected earnings going forward. That isn't changing valuations because, again, with inflation, you have to up your multiple, and a lot of people miss that. They just assume that it's gloom and doom whenever there's any little hiccup. Companies are still making records amount of money, but they're also buying back records amount of stock. So it kind of cheats the shareholder, but that's a whole different issue. Treasury's holding up surprisingly well, given where we're at here. This should be dipping further, which means maybe there's a play in there that they think that things won't escalate as far as rates, which, according to the Fed, it should. Now we're going to be getting close to an answer on that here in the next few days. So we'll see. This oil bump certainly could be problematic down the road, particularly going into the beginning part of the year, and then even with winter about to unfold. And gold still not catching a bid. Again, we talked about that. Trade had sort of been usurped by the oil trade, and that was just because of a liquidity issue, and certainly made it much more portable as far as an inflationary hedge as well as just a trading vehicle. Intraday was very nice yesterday. Okay, so we were in this continuation from the gold going before, then pre-market got extremely overdone and produced very nice short snake. Now, we could have taken it here, but even if you had waited the one extra for the clarity with the green collapsing and the cyan rising, more than adequate, because that's that little second histogram right there, and it really pretty much developed right at the start of the bar, and that continued all the way down. And you can see I've got the little boxes drawn, because what I like to point out is you get a concern point here when you get the steel crossing the red as usually a warning that, hey, you could have a slowdown in your decay. Once you get above there, until you get a reset of that steel, you're pretty much in a short draw until you get a nice reset, usually at the below 13.5 range. This one happened a little earlier. You get a nice deep plunge, and it's usually hey, you can take cover. But the interesting part about it is it's also letting you know you've got another opportunity to short as soon as another signal pops in, and that didn't happen very long after. Put in a positive extreme, which gave the 38% as a clear guideline. So shorting right at the 50 here on this beautiful continuation of a short snake. It actually started a little earlier, but kind of premature. But by this bar here, you already knew where this was headed. You get full confirmation on the final one before breakdown, and that took us to new lows, which was not surprising given that you had dipped below the red line here. You expected to retest that, and likewise right here, dip below the red line on the new lows, but matching lows. No similar dip below the red line, letting you know, hey, we've got a divergence, not to mention much higher readings for your DOC. So that would be like the pivot 2. Actually, if we put up the chart, we'll probably see it right here. Pivot 2, it's a higher pivot. Actually happened even right there, but the problem was you had no reset of orange. Here you had the reset of orange, and that's why we saw the takeoff. And what was happening is we were still looking at a continuation, even as far as this bar right back here, because orange was immediately over, and then green overtook it right at the start of the next bar right here, and that kind of flipped it from maintaining short to it was going to be a brief pop, and sure enough, that made it all the way back up. Wow, huge decrease in the overall high. All we did was move back up to the general 50% of the run, and could produce a short setup here very shortly if the cyan gets in there and you get a bit more fading of the green into red. And that would be enough to send it down. Regardless, you still have several positive extremes all the way back down to 22 for the low on that one. So that will be the target range going forward, given that setup. But some really clean action. I mean, it's not a huge range, but significant enough. You know, even if you had waited for the bar there at the 31 and covered at the open down at 22, you're not exactly having a rough go of things. It makes it pretty straightforward action, so it's all good. Be putting together indicators for next month, and probably we'll see the changes that I've. Whoops, that was not what I intended. We'll see a modified version of this setup here that eliminates, particularly in a downturn, some of the false signals, has much tighter guidelines for seeing the yellow on the Diocon paint, and I may leave as an input option whether or not you want to see the P2s, the P3s, which would be the pivots of the red DOC, as a bonus day just to see when there's an improvement. Probably won't have them pop in if they don't have an orange reset. That just keeps the chart from being uncluttered, because you still need the buy element into it, just whether or not you're seeing improvement, and things should start to pop. So I think that's a nice little bonus criteria to have in there. As always, though, I will put up any charts that are relevant and keep you updated. Trade well. We'll talk to you later.